And now to the preview for the non-farm payrolls. Non-farm payrolls, they only need to be good enough, okay? Good enough. The bar is low. So it's the last report before the elections. Last time, Trump, in the last debate, the Republican nominee said that the previous report was terrible, a disaster. He was totally wrong, as he likes to say. It showed a gain of 156,000 jobs, which is okay. Wages 2.6% year over year, well within range. The unemployment rate did go up from 4.9 to 5%, and that has political implications. But for markets, if this rise was accompanied by a rise in the participation rate, which was exactly what happened, it's not bad news at all. More people are joining the workforce. For a Fed hike, for the Fed to raise rates, we only need about 150,000. That should be good enough, because as the US nears full employment, the gain in wages will be smaller and smaller, but there should be more pressure on wages. Again, wages were around 2% for a very long time. They did move up to 2.5. They reached a peak of 2.7. I would say that 2.5%, a bit lower than last month, will be good enough for the Fed to raise rates. What's expected? Our market expectations stand at a gain of 175,000 jobs. Of course, we have ADP today, ISM non-manufacturing tomorrow. Things might change just a bit, but they usually don't change that much. These events usually have their independent impact on markets. Wages are expected to rise 0.3% year over year and to remain at about 0.3 month over month, 2.6 year over year. The unemployment rate is expected to tick back down to 4.9. Again, it's more important for politics. Markets aren't detached from politics, but if markets don't listen to politics, no change in the unemployment rate will not make a difference. More importantly, the focus is on jobs gained and wages. What's the expected reaction in markets? Because the focus is on the elections, we would need much bigger surprises to move markets, okay? So I would say that even 100,000 or more this month is good enough for the US dollar to say, okay, not a good report, but never mind, let's focus, let's obsess on the next opinion poll. Okay, remember, it's released Friday, 4 days before the elections. And last Friday, we had a big surprise. So markets will be on edge towards the elections. If we have 300,000 or more, that's already great news. That's already independent of the elections for markets, and that will be a big boost for the US dollar. Under the 100,000, of course, it's bad news for the dollar. It also has political implications. And so that will weaken the dollar significantly. Wages will come secondary. This time, in some months, we had wages sort of being the most important event, while headline number was a bit behind. This time, the headline is the headline, and that's it. And unless they come out at a really big surprise under 2.2%, which is bad, of course, or above 3%, which will be a huge positive surprise. So we need really big surprises to move the US dollar.